Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the dollar looking pretty good, right? US inflation numbers came out as expected, so no major moves, but it just shows the US economy is pretty stable, and that has seen the interest rate probability of the Fed for a 0.25% cut go up to 96%, right? So no change as expected, but for me, that's a good thing, right? Because it steadies the US dollar. Now, just coming into today's numbers, I just didn't get enough time to get this up quick enough. We've just seen the Aussie employment numbers, right? The RBA on Tuesday hinted that they were sort of leading towards a rate cut in February. That's what the market's factoring in. Now, the employment numbers, right? There's two parts to the equation: inflation numbers, employment numbers. These numbers are as good as they've probably ever been, right? Looks like everyone is scrambling for a job to pay their mortgages and everything else and keep afloat. So those numbers were really strong. And what we've seen just in that short period of time, the Aussies jumped up about 30 points, right? A little bit of a flush out of those short positions that were added the other day. Now, this is a little bit disappointing because I was looking to get short Aussie on a little bounce and also sterling Aussie, right? Trending higher, long term and short term, looks very good. Now it puts that into sort of jeopardy at this stage. What I need to do is come back and test or check this later on to see if it has changed the sort of short term picture. Because right now, things are a little bit blown out. And if you're long, right? If you're long like Euro Aussie, Sterling Aussie, you've got to hang on for dear life now, right? But you know what? If you've got a plan and structure and you're not caught, well, you can sit back and pick it off when it does turn. Now, news that's around the place, I think you're going to see this a bit more, right? The weaker Chinese yuan, um, you know, blah, blah, blah about China, but they are in trouble. I tell you what was interesting though, Yellen, right? The previous Fed chair was saying if the Chinese, what they've done forever is manipulate their currency. If they aren't selling, they just discount their currency and they keep selling. So there is going to be potentially political action if they start discounting their currency to keep sales going abroad. So that's going to be an interesting one as it plays out. Now, just looking at the major calendar here, we've got coming into Thursday, you've got the weekly initial jobless claims numbers, right? Now, this is numbers drifting back into a tier two, tier three number, but just keep an eye on it. 220, the forecast, 190 to 235, the range of that data. And you come down, we've got the ECB, we've got the Swiss National Bank. We've got a bunch of things coming out here that are really going to spice things up. Now, if you look at the interest rate probabilities, this is where you can really work out, is there going to be any major impact? Okay, so the ECB, 93% chance of a 0.25% cut, right? So that's pretty much done. So there's not going to be much change on the announcement. Maybe keep an eye on the statement. That could be the next part of it. The Swiss National Bank, though, there's a 58% chance of a 0.5% cut. So we get a line ball here of that 0.25 to minus 0.5 cut. If they cut by 0.5, right, well, there's 42% have to sell the Swiss to catch up. If they only go by 0.25, 58% have to unwind that position, right? So there's going to be movement, dollar Swiss either way. So just prepare for that. I'm sort of sitting back and letting these central banks just walk through the door, have their speech, and then walk out the door because the good trends will become apparent straight after this, right? So when you are trading today, just keep an eye on your charts, keep an eye on what's going on. And in particular, the pairs that are in play today, Euro, Swiss, and their crosses, right? That's where you want to be looking at. And with something like the Aussie, okay, coming into play here with stronger employment numbers, and the only reason the Aussies jumped up here is because the market got short on Tuesday after the RBA sort of softened their tone, right? So if you're looking for a trade here, you can see Aussie Swiss has just jumped up, right? So if if there's a 0.25% cut by the Swiss National Bank, you'll probably see Aussie Swiss come off because 58% of the market are going to buy, and that's where that will come down. If it's minus 0.5, Aussie Swiss keeps going up. But this is where the fundamentals, and you just got to understand the fundamentals and how they work. It's they do control the immediate direction, right? So just be aware of that. Okay. As we go into the Swiss National Bank policy rate, okay, 0.25% factored in, chance of a zero point 0.5. It's bigger than what this service is telling you. ECB, well, 0.25% is the number. There is a few outlier numbers suggesting zero point 0.5, but you can tell by the interest rate probabilities here, these numbers here are calculated from the derivatives market, right? Which is the underlying what's been factored into interest rates, forward rates, etc. So I can't see the market getting it wrong there with the ECB. They've been pretty steadfast. But the Swiss National Bank, this is game on, right? Would I suggest you get short or long on the numbers? Well, not really. It's Russian. It's not Russian roulette. That's a bit different. But it's like going to the casino and you're betting on the outcome. There's going to be volatility at the time of the release, and that's not good for us. But what we want to know is the answer, and we can trade that for the next week, 2 weeks, month, right? So don't burn yourself on the release. Wait for the outcome and then look for the opportunity. And by what I mean by looking is look at your charts, right? Look at what's going on in Swiss and Euro on the charts. And that's where the trades are going to pop up, right? So the smart thing to do is get your technical analysis done. You'll be able to see where those pressure points are and anticipate the moves around that, right? Euro is going down for all money. The dollar has steadied after those US CPI numbers. Dollar's going up. To me, getting short euro is a really good thing. Now, just to give you this a bit more sort of detail there. Okay, in the live trade hub, on the majors, I have included the short-term and long-term trends. Okay, now you can really line things up. Ideally, right, you're looking for instruments that are going up short-term and long-term, and that do have a signal, right? Doesn't mean you don't get short, say, something else like sterling here, right, which is going up short-term, but long-term it's going down. What it might mean is you just need to keep an eye on things. So maybe do a bit more technical analysis, and you'll be able to work out the answer, what you should be doing there. Okay. The prime time analysis, right? This is the crosses. And with the crosses, we are cherry picking the best pairs, right? The ones where the short term and long term support line up. And you can start to see when the boards light up, right? They all light up at once. So expect more action out of the crosses, short term and long term signals there across the board to keep you on track with what you should be focusing on. All right, guys, that's it from me. Have a good trade day. All the best. Cheerio.